You're tuned to Trust One Realty, making sure your next move is a smart move. Now here's your host, Arbi.
Welcome to Trust One Realty. I'm your host, Arbi. Today's show is brought to you by Billy Fairchild from First American Title in Santa Clarita, California. If you need any title report, contact him at 661-373-7227. The purpose of the show is to educate our listeners regarding the real estate industry. Now, let me tell you a little bit about my background. I created a multi-million-dollar company with two partners with an investment of $30,000 in 2005. While my company was operating, I decided to get involved in the real estate by flipping houses, and in some cases, I would buy and hold the properties. One thing I did realize in my 10 years in real estate as an investor was the lack of customer service. I felt like I was being seen as a transaction rather than someone who needs agents' expertise. This was my experience I received and decided to be an agent to provide the services that the industry was lacking and the knowledge that was not being provided to the customers. I started Trust One Realty to offer transparency, knowledge, and expertise to clients in the residential and commercial real estate. We offer educational seminars similar to what we are doing on this show. I always bring guests to my show and to seminars who are experts in the different parts of the real estate transaction. Trust One Realty also gives back to the community by donating non-perishable foods and donations. In addition, Trust One Realty guarantees to all of our clients that we will exceed your expectations in any transaction. Trust One Radio Show will be your resource to help you navigate through one of life's more stressful events, the largest purchase you may ever make, a home. Trust One Realty also has seminars to provide you with wealth of knowledge for free from active agents and loan officers in the industry. Trust One Realty is here to answer any questions you may have. Don't you go anywhere. When we come back, we have a guest calling in from Santa Clarita, California. You are tuning to Trust One Realty, and we'll be right back.
You're tuned to Trust One Realty, making sure your next move is a smart move. Now here's your host, Arbi.
I'm excited to introduce Rona Jukes from American Family Funding, who is our caller for today. How are you doing, Rona?
I'm doing great. Thank you so much for having me.
It's my pleasure. So wanted to ask you a few questions regarding mortgages and loans for our listeners who are buyers. What type of loans do you offer?
Well, we offer all types of loans, conventional, FHA, VA. We pretty much a full array of different loans.
What type of loans do you have for buyers who are seasonal buyers?
Well, again, the conventional loan, you can look at putting as little as on a conventional loan as 3% down. FHA allows for 3.5% down. It all depends on each individual's needs.
Yeah, because a lot of buyers right nowadays really don't have an idea on how the loans work. Other than the FHA, they don't know how the down payment works, PMI. Can you kind of go into the direction that a new buyer would look into if they're planning on buying a new home?
Absolutely. Their first stop, as I like to call it, would be with a lender. And I can speak for myself is I look at like an interview process. I sit down with them, whether face-to-face or over the phone, and do kind of like an interview. Tell me your wants and needs. Tell me what, I go over their job. Are they self-employed? Are they W-2? What funds are available for down payment and closing costs? And we just have a dialogue as to what's important to them. Is there a monthly payment in mind that they want to stay in a range of? And then that allows me to provide them options so they can make an informed decision. I love first-time home buyers. I love the education process. I'm a loan officer. I'm a senior mortgage specialist here at American Family Funding. I've been doing this for over 44 years.
Wow.
But it's all about the client. It's all about that borrower and meeting their individual needs. And so I love to be an educator as well. I love
Absolutely.
to educate them on the process, keep them informed. From the time of application, I'm with them all the way through to signing their loan documents. I attend most of my clients' doc signing appointments so that if there is a question, I'm there to answer it.
Wow, I haven't actually seen that because I bought a few homes and my lender disappeared.
No, I don't disappear. As a matter of fact, I don't even disappear after we fund their loan and they close. We're in contact with them, providing them valuable information within the first year, and then I go ahead and do an annual review of their mortgage to make sure that it's the right loan for them and making sure that nothing has changed that I might be able to better their position.
Awesome. Now, can you explain to our listeners what PMI is?
Sure. PMI, you're going to hear different terminology. That's old term PMI. I mean, that's from my days. I used to be an underwriter and worked in loan service. PMI is private mortgage insurance. Another reference to that might be MI, or just mortgage insurance. Now, anytime you put less than 20% down, or your loan to value is greater than 80%, then it is required to have mortgage insurance or PMI. That's based on. So, of course, the more you put down, the lesser the mortgage insurance premium can be. But there's so many variables that go into it. They look at FICO scores or your credit score. Just pretty much the same as pricing. And so when mortgage insurance is required on the loan, I also have numerous mortgage insurance companies, and I shop for the best terms for my clients.
That's what our listeners are looking for. Now, what's the lowest down payment that the lender is able to provide other than the regular 10 to 20%?
Well, you have a conventional loan that will allow 3% down. There are some restrictions with respect to income level. There's a guideline that we have to follow. Your annual income can't exceed a certain amount. FHA, there's pros and cons to an FHA loan, but it's a great first-time buyer. Its minimum is 3.5% down. It is government insured. There is a monthly upfront. Well, there's an upfront mortgage insurance premium that gets added to your loan amount, and you pay that out over 30 years.
Okay.
And then there's a monthly mortgage insurance premium. It just allows for a little bit more flexibility in qualifying than a conventional loan.
Okay, and you also offer VA. What?
Oh, VA, that's my passion.
I know that. That's why I wanted to bring it up because I know you love that.
That's my love. You know what? I just feel it's just so important to get our veterans into homes.
Exactly.
And thank them for their service.
Absolutely.
And so a lot of our veterans don't even realize what their home buying benefits are. Depending on a county that you're in, I'll speak for LA County. You can purchase a home with no down up to $636,000.
Yep.
And so many veterans don't even realize that they can use their benefits more than one time on a home purchase.
But I spoke to a few veterans, and a lot of them are under the impression that they don't want to use it is because they only allow them to do it once, which is actually incorrect.
It is incorrect. If you purchased a home and you used your VA benefits, you sold that home and paid off the loan, it reinstates your eligibility.
Right. And a lot of them are actually under that impression, which I don't know why
Right.
the VA office that they go to, they actually don't tell them exactly what the process is. So maybe you could add that to your that's one question that I always get is that I cannot use it again.
I know, and what we did is I have a flyer that we use, the 10 top myths about VA loans. You can use it more than one time. You can do a cash-out refinance 100%. So, in other words, you can, most the conventional loans will allow you to go up to 80% cash out, but VA will allow 100% to be cash out.
Right, and then if you're purchasing the house over 635, you only have to put 5% down. If the property is more.
If it's over the conforming loan limit, which is $636,000 in LA County, then all you do is you pay 25% of the difference between the purchase price and the, let's say it's $736,000 purchase, right?
Mm-hmm.
And you're allowed up to $636,000. You pay 25% of that difference of $100,000.
Wow. That's fantastic.
And you can buy VA up to $1.5 million purchase price.
Wow. That's pretty much what most houses are in LA.
Right. And then on a VA loan, there is no monthly mortgage insurance premium, but what they have is what they call a funding fee. Again, that is added to the loan amount and is amortized over the life of the loan. However, if you are a disabled veteran and you are collecting disability, that funding fee is waived.
Okay. Wow, she's great.
Yeah. So there's so much about VA, and that's what I'm trying to do is go out and educate our veterans regarding their benefits for home buying.
Hopefully, in one of our next show, we'll have it only VA discussion.
Oh, I'd love that.
We'll schedule that in. We'll schedule that in for maybe next couple of weeks, and we'll do only VA loans.
Sounds perfect.
The other question I had is, I know a lot of buyers that are in the process of buying a house, and they're so excited. They get the loan, and then they go shopping before doing escrow close. What are the most important things that home buyers should not do before they actually close?
Okay, that's another part of my interview process and part of my preparing them for a home purchase. One of the things that you do not want to do while you're in process is add to your credit debt. Thank you. I just lost that.
That's all right.
So one of the things that I talk to them about is while we're going through this process, whether we're in the pre-approval stage or they've identified a property to purchase, do not go out and establish any new credit. It is important that once we run that credit report and we establish a FICO score, there are no changes throughout the process. So it's not a time to go out and buy a new car or get excited when I call you and tell you that your loan's been approved, okay, because you want to go out and buy new furniture. Do not do anything to alter your current credit status until the loan closes, it records, they hand you the keys. And I'll explain why. Just before we issue loan documents, they pull what they call a soft credit. They want to make sure that there are no new debts that came into play between the time we initially ran the credit report and we're ready to issue loan documents. Unfortunately, I've had people get excited and they've purchased a car. Now, sometimes, there are times where the car breaks down and you have no choice. And that usually my clients will make me aware of it so we can tackle it in the beginning. But when it's a surprise and then it has to go back to the underwriter and may cause your debt-to-income ratio to alter where it no longer meets our guidelines. Now I can't complete the process.
Yeah, I actually had a few people that went and did a full furniture shopping.
Yep.
And then they couldn't, and then they got declined for the loan.
Right, because it created a new debt, which caused their debt-to-income ratios to change.
Right. The other one is don't open a new account and not a new job.
Yes, or retire. I've had people retire in the middle of a refinance. And we also do, prior to funding, they do a verbal verification of employment.
Yes.
And we want to make sure it's not a time to change jobs, change your credit profile, make any altering changes. Another thing you want to watch out for is we always have to get the most recent 60 days of bank statements to verify where the money is coming from.
Right.
Watch for any large deposits into your account. If there are large deposits into the account, then the lender is going to want to have a source where that money came from.
Right.
And we need to see a paper trail. So just be cautious of making any large deposits. Or if you do, it's okay. Just make sure you have the paper trail to match that deposit so we can show where the money came from.
Right. Now, what's the amount that they consider large?
It's usually about it's about 20% of your income. But anything out of the norm, they may ask for that trail. So it just depends on each individual.
Which is why you should leave your bank account alone until you close. You need the key. After you get the key, you can do whatever you want.
Well, after you get the key, I mean, the loan, we were able to verify everything, and all the I's were dotted and the T's were crossed. Mm-hmm. But anything along the way, any hiccup could cause the loan not to now be in a position that we can close.
Right.
Any change to income, assets, or credit.
Right. Now, how long does it take for your firm to provide a pre-qualification?
Okay, well, there's two things. We don't do pre-quals anymore because a pre-qual is basically tell me what you make, tell me what you do, and it's not based on any supporting documentation. We issue actual pre-approval letters, which means I have run your credit, I have reviewed your income, I have reviewed your assets. Now, it hasn't been seen by an underwriter yet, but I've run it through the underwriting system, and as long as I get an approved eligible, I'll issue a pre-approval letter. However, I take it one step further. While you're out there looking for a property to purchase, we run it through our system, and we get our buyers credit approved.
Okay.
And what that does is that means I'm sending the file to an underwriter, and the underwriter is reviewing the file and getting you credit approved. That gives you two things. You have the comfort as a buyer to go out and know that you've been credit approved for X amount purchase price.
Right.
But more importantly, it gives your realtor a little bit more negotiating power when they're presenting offers that not only is this a pre-approval letter, this is a conditional pre-approval letter, that this buyer has been credit approved by an underwriter.
Right.
And for an example, I had a client who was up against 7 offers on the same property.
Wow.
And they took her offer over the others because she was credit approved by an underwriter. All we were waiting for is for her to identify a property to purchase.
That's one thing I let a lot of my clients know, but for some reason they don't like to have that and would basically wing it when they want me to make an offer. And I tell them that if you want the property, we have to have all our ducks in a row. You can't just walk in there and say, wait for it, because somebody else is going to be ready to go, and you're going to lose the house. And it takes them they take some one loss for them to kind of understand that this market right now, it's not one offer. It's always multiple offers. For the past 8 years, it's all multiple.
It is, and not only that, but you have buyers out there who have a monthly payment in mind. While their overall profile may provide for a higher purchase price or loan amount based on their income and assets and everything, but it's important for me to understand where their comfort level is on a monthly basis.
Right.
Because they have to make those payments every month. I don't. So it's important for me to, while I could probably qualify them, for a higher purchase price, their comfort level may only be at a lower purchase price.
Right. And that's very important for listeners to, when they're ready to buy, talk to a lender, preferably Rona, and get the paperwork ready, because you're going to need it when you find the house that you want to move into. Thank you very much for joining us at Trust One Realty.
Pleasure.
How can our listeners get in contact with you if you have questions regarding all of the loans that you offer?
Well, please feel free to reach out to me. My direct number here at the office is 661-505-4335, or I can always be reached on my cell phone at 661-904-7070. And my email is Rhona, RHONA, at AFFloans.com. That's Apple Frank LOANS.com. And just so that your listeners know, I understand that this is probably the most important investment you're going to make, and I take that very seriously. So I don't work 9 to 5. I work around my client's schedule. I take calls in the evening. I take calls on the weekend, and I even set appointments. So I work around your schedule. I'm here to answer your questions and guide you through the loan process.
Man, I wish every lender was like that. Thank you very much, Rona. I really appreciate it. And
thank you for having me on. I really enjoyed it. Thank you.
It's my pleasure. You're listening to Trust One Realty. Stay tuned. And when we come back, I'm going to give you Arbi's Pick of the Week.
Dash Radio.
Island Block Radio presents Trust One Realty with your host, Arbi.
Welcome back to Trust One Realty. I'm your host, Arbi, and this segment is sponsored by Only Escrow in Woodland Hills, California. If you need escrow services, contact Marlen Videz at Marlen, Marlen, at only-escrow.com. Once a week, I will pick a listing, a city, or schools, and I will offer my insight. And for today, it will be Studio City. Studio City is a small pocket in San Fernando Valley. It is a well-kept city that is growing with modern architectural designs, and residents from corporate to entertainment industries are moving and enjoying the nightlife. It is a great place to raise family and for investment opportunities. There you go, folks. Our second episode of Trust One Realty. I want to thank Rona for joining us. We hope to see you next week. From all of us here at Trust One Realty, where we hope to make the next move a smart move. I'm your host, Arbi, and we'll see you next week.
You're tuned to Trust One Realty, making sure your next move is a smart move.